Let's move on and let's discuss what's the way forward really in terms of the quarterly performance with regards to demand trends, price hikes. How is Blue Star really coping up with the demand supply scenario right now and the dynamics thereof? We have with us the MD of the company, Mr. B. Thiagarajan, joining in on the show right now. Mr. Thiagarajan, good morning. Great to have you on the show as always. Just wanted to understand, despite a seasonally weak quarter, you've actually managed to report a pretty strong set of numbers as opposed to what your peers have done. What really has aided the growth for you?
Good morning. It's a pleasure talking to you. The festival season was somewhat muted, but we had got our product portfolio right. As I have been telling you and others, that the margin pressure led to price increases thrice during last year. Then we felt that the commodity prices are not going to come down. We need to redesign our product portfolio, and therefore the product portfolio has been redesigned. The second thing is that our distribution penetration in northern region was not to the extent that we would have liked. That part of it has been corrected. So these are the two primary reasons for us to improve our market share. We improved our market share from around 13 to 13.25%. And that has given us the growth which exceeded the expectations of the market. And I think Q4 also will be good.
Quite interesting. I think you're one of the first companies who's actually maneuvering and trying to adapt around the raw material price trend, which doesn't seem to be, changing anytime soon. But what I wanted to also understand was whether or not the current raw material price inflation has been passed on to the consumers, or would there still be some more price hikes that you'll have to undertake?
So we had increased the prices thrice. We did it in April. We did it again in July. We did it again in October. As you might have noticed that still we couldn't protect our margins. There was a margin erosion close to around 1.5%. Going forward, I think we will do the price increase only if the commodity prices are going to further go up, and that too we will take a call only in the month of April or May. We will watch for how the summer season is going to pan out.
Fair enough. Just taking a look at the company's financials, Mr. Thiagarajan, and your gross margins have remained under a little bit of pressure. What is the outlook on your overall gross margins going forward, and what is the position when it comes to your net debt?
So what we have, first I will deal with the debt. On the debt front, we are doing extremely well. If you notice, our net borrowing is only at around rupees 165 crores. So there is absolutely no concern there at all. And even in the electromechanical project segment, we are doing extremely well. That we are selective in accepting the orders, and we are executing the orders well, and the cash flows are maintained in a healthy manner. So that is not the issue. So there are capital expenses that we are incurring. You are aware, in Wada, a deep freezer plant is getting commissioned in March or April, and we are also investing in Sri City for a new room air conditioner plant under PLI. So even taking into account these capital expenses, our cash flow will be healthy. Our ROC will be industry benchmark. So there is absolutely no doubt or concern we have on that front. So coming to the margin outlook, we had indicated that for the Q4, that is between January 2022 to March 2022, the segment 1 margins should be for the quarter, it should be around 5.5% to 6%. And segment 2 margin for Q4 alone will be improving to 7, For the full year, you're aware the summer season last year was lost. So therefore, the full year margin should be 6 to 6.25%. This is the indication that has been given to the analysts and fund managers as well in the investor con call. We continue to maintain that.
Okay, that's an outlook on your net debt as well as your overall gross margin picture. And you flagged off, a little bit more about your expansion plan. So I just want to talk about that in greater detail in terms of how you see the growth of your projects business and what can we expect on that front?
The order book as of December 31st stood at 3,301 crores. And again, it was higher than what it was a year ago. That is 31st December 2021-20. It was only 3,157 crores. So you can imagine that the growth is happening there. And we had felt that the office ITES segment will not be taking off. But to our surprise, the demand has come back from that segment also. The office consumption is going up, ITES consumption is going up. But the big driver is the manufacturing related electromechanical projects. We are executing quite a few orders, and factories as a segment is giving us a lot of growth, and the outlook is extremely good in the coming year. The next one is the infrastructure projects, whether it is a metro or railway or airports or water-related MEP projects. These are big orders are there in hand. Big orders are expected to be finalized. So if you look at the union budget also, it opens up these sectors well, driven by PLI manufacturing, driven by infrastructure investment, therefore power or airports, metro railway, so on and so forth. The prospect for electromechanical project segment is also extremely good.
So, given that the outlook is so strong going forward, Mr. Thiagarajan, what happens to your capacities? Are you looking to expand more, or is it too soon to, venture into that?
We are expanding. Even during the pandemic year, the 2 consecutive summers were lost. So the commercial refrigeration business or room air conditioner business took a hit. But even then, we decided that we have to go ahead with the expansion plans because the outlook is good for both these segments. The room air conditioners, as you know, the penetration is below 7. And I think we are entering a phase for next 5 years. It will continue to grow in higher than 15%. Definitely 15. It can even touch 20% going by what is happening in the marketplace and the lifestyles of the residential consumers. So therefore, we decided to invest in a plant in Sri City. It will be 1.2 million. In phase 1, it will be we will be looking at around 4 lakh units. So that plant will get commissioned somewhere in October or November 2022. Deep freezers, we had almost reached full capacity in our Ahmedabad plant, and we are setting up a new plant which will be commissioned it's awaiting some final approvals. It should get commissioned by March or April. That's a 2.5 lakh units of deep freezer. So the capacity wise, we have taken care of. It adequately meets our needs for next 3 years.
Interesting. Good to speak with you today, Mr. Thiagarajan. Thank you so much for taking the time out.
Thank you very much. It's always a pleasure interacting with you.